Hi, I'm Bert Nussbaumer from macrobeat.co.uk. It's been a week with very little data for the real economy, but there are various tensions around the US and China relationship that seems to just deteriorate rather rapidly. And I think the market just has to start to understand that all is not good on that front. The US seems to be preparing various sort of lists in terms of sanctions against either Chinese individuals or other sort of things we don't know yet. This is all in connection with obviously the Hong Kong situation as well as the Muslim region in China situation. So we got a little glimpse yesterday. The market didn't take it well. We had Biden in his economic speech attacking Wall Street, which didn't really go down well with equities either. And we still have record numbers of COVID-19 in the US, more than 60,000 again a day yesterday. That is still something that concerns me a lot. The market still shrugs its shoulder a little bit, which is a bit worrying. Maybe it's because the death rate is still relatively low, but seems to be picking up. But whatever it is, I think there's a lot of worries out there, a lot of different stories that could sort of add to the sentiment to deteriorate, and it's definitely something we're going to have to keep an eye on going forward. I think the other thing very important this week has been that the Dow didn't manage to break the 200-day moving average on the top side. That area just seems to sort of be the peak for now. We have turned back down on, as I mentioned, various sort of stories. And I still really expect the Dow to come off another 10-15%, not in a brutal sort of March 2020 type of way, but maybe just on a more gradual kind of move lower as the market starts to understand that the first part of the recovery might actually be over. On the first slide, as I said, we don't really have a lot of really true tier one data, but I thought I'd just pick one or two out. The first one here is the consumer spending. Obviously, consumer spending is going to be very important if we want to carry the economy into a V-shaped recovery. The strange thing is the low income is back to pre-crisis level, which is a bit worrying, which probably means like all those checks they got were just straight away spent. But all the rest of it seems to be not truly recovering. What they all have in common, they kind of sort of turning. And I think as businesses are coming back and unemployment now really about the difference between bringing furloughed people back or actually start to shrink the business, as we have it in the UK, where we get a lot of news about people being let go. This could be the concern, and that could really be the chart that may show that we're not going to have a V-shaped recovery. The next chart is the bank deposits. That is obviously a huge jump in terms of furloughed people not having time or the ability to spend money, so that the bank balance has gone up dramatically. Is probably something that we have seen happening across the world. Really. It's the same in Europe as well. The question here is, are people willing to spend, or are they going to be nervous looking forward? That's going to be the big challenge in the next few months ahead, especially in the US with the rising COVID cases. The next chart is dollar CNH, a very odd move that we've seen. We've seen a rapid leg lower in dollar CNH, which is very uncommon, especially if you think the PBOC has done everything to throw the kitchen sink at the current downturn. To allow the CNH to strengthen it rapidly doesn't really suit the policy. So I'm a bit surprised about this move. I would not be surprised if that is a political motivated move in terms of letting the dollar slide and just have a little hint to the US, but who knows? Very uncommon, but I think 697, 698. If you start to break that area, then I start to really be concerned that there's some other story going on out there. The next chart, we have the Dow Jones, as I said, 26,250, the 200-day hasn't been broken, so the risk is again focusing on 25 or 50, which is going to be the 4-year trend line, a break there, which just be the start of this move lower in equities, so I think equities are topping out here. And last but not least, weekly gold chart, finally broken that 1790 level, the double top from 2012. We hit the speed line at 1819, and I guess we start to consolidate again for now, but generally trend still higher after some correction maybe. Thank you very much indeed. Have a lovely weekend. Bye-bye.